Good morning, everybody. Just give me 1 second. Good morning, good morning. Just give me 1 second and just want to share this out in the chat. Okay, sorry, just had to post that in the Discord. Okay, and I'm also going to be sharing a list in the Discord with some options that I'm looking at for today. So go ahead and check general chat. Get those added to a watch list because we're going to be talking about them. Now, if you don't have the Discord, that's fine. I'll just be going over the trades individually regardless. Good morning, everybody. Okay, so we have about 12 minutes until market opens. Now, the trades that I'm looking at, okay, we're just going to very, very quickly go through this new list today because I want to also go back to the previous list and go through those as well. Okay, so let's start off American Airlines. Okay, I'm looking at the 106, or I'm looking at the 16 calls for July 20th, or for July 17th. Um, the reason why, if we are forming a small cup here, which it looks very likely. Let me change the template. Okay, we're forming a small cup there, which again looks very likely. What we should be forming is a handle to push this additional cup up here, which puts us at the 1650 or even higher. We're taking the 16 strike, so that would run in the money very easily, and it's very cheap. So again, that's American Airlines, symbol AAL, and that's the 16 call for July 17th. Next trade is ARDX, Ardlex, whatever this company's called. Doesn't look super strong in here, but there's a couple things that I really like. So one, we are at the lower Bollinger, and when we're at the daily lower Bollinger, usually that causes a fairly large reaction to the upside. You can see that throughout the chart here, lower Bollinger, move upward, lower Bollinger, move upward, lower Bollinger, move upward, lower Bollinger, move upward, move upward, move upward. So what I'm attempting to do here is close this larger cup, essentially, to this $8 range. Now, for this one, we're targeting the July 17th 6 straight calls, so that's not that far out of the money. And if we closed any of these cups, so even this smaller cup right here, then we're going to see this contract pull in the money, very well, potentially multiple dollars. So again, that's the ARDX 6 strike call for July 17th. Now, Figma doesn't have a whole lot of history to it. Obviously it was 142 at one point, and it's just been kind of pulling down, down, down. Now, what I'm trying to capture here is that we basically have this cup forming. If we're not going to, continue breaking down at this point. But we do have this cup forming, and this cup looks, pretty decent. So what I'm trying to target with this is the 30 strike calls for July 17th and the 32 strike calls for June 18th. Okay, the June 18th one is more of a risk because obviously we'd have to get, roughly $8.50, $9 of price action to the upside within the next 2 weeks, which can we absolutely have happen? Yeah, for sure, but just have to be careful because that's still quite a move to the upside. So I really like the 30 calls for July 17th, but I do have some of the June 18th 32 calls going as well, and that's purely just to capture this cup top. Top of this cup is at the 32, like 63-ish range. So that pull us very much into the money. Good morning, everybody. Yeah, we can write it in chat in a second. The next trade we're looking for is GoodRx, so it's GDRX. What we're targeting here is there's already this cup formed. There's already the handle formed. And there's a handle on that nested cup slash cups handle, which is telling us that very likely this is trying to break out. Okay. Now, what we're wanting is the 2.5 strike calls, which those are basically already in the money. They're still very cheap though, so we're just trying to collect some of that upside premium. If we're going to be getting this upside, then this is kind of the breakout structure to capture that. But these are the 2.5 strike calls for July 17th. Okay, I think there's a ton of potential in these to run potentially all the way to this $5.80 range, which would pull that contract in the money by a whole, $2.50 basically, so $3 roughly. So I like that trade a lot. I think it's really good. Now, Copen, we have, let me redraw that cup. Now these notes are from weeks ago. Okay. But we did get that downside we expected. However, this cup is formed now. And from that cup forming, I'm basically just wanting to capture the slight downside before the further breakout. So what I'm wanting is the 5.5 strike puts. This is only something that would last for maybe a few days tops, because we're already at the 590 in the pre-market. So this is just a very, very small move to capture this downside. Now the downside target would be around that 520-ish range, which doesn't seem like much, but if they push that 520 range, then they're very likely going to try to push a little below that, which, if that's the case, then that can actually invalidate this cup here, which would make these puts very, very nice. But these are the 5.5 strike puts. They should run in the money whether this becomes bearish or if this is just bullish liquidity. So 5.5 strike puts for June 18th look really nice. Now the next one we're looking at is Netflix, which, yes, there's some bearish structure here. Okay. We do have this inverse cup build. Potentially, this could be forming a handle to the downside. However, we are at the lower Bollinger on the daily time frame. And usually from the lower Bollinger, we do see bounces. So if we're going to have any form of bounce here, it's going to be actually pretty large. So we're targeting the June 18th 86 calls to the upside. The upside on this bounce would take us basically all the way to the 108. So potentially those could be, pulled into the money by almost, what, $12? Something like that. $22, excuse me, I can't count today. But I like these calls a lot. These are the June 18th 86 straight calls to the upside. So simply just looking for that smaller cup to form. Okay, even if this is going to be bearish and it pulls downward, we should still be able to pull some premium out of this. Even in the worst case scenario where they just simply pull this back to the upper Bollinger, then that upper Bollinger is already at $91, which would pull these calls in the money by at least $5. Okay, so these look really nice even if Netflix is on the downtrend. Okay, 3 minutes till market open. We're almost ready. Alright, next trade is Novo, so Novo Nordisk. And we're simply just targeting this cup. Okay, now it looks like it's in a downtrend, but again, we are at the daily lower Bollinger. And from the lower Bollinger, usually you do have pretty large reactions to the upside. So worst case scenario, lower Bollinger, we pull up to this 49 range, but we're targeting the 50 strike calls for July 17th. So by the time we hit this 49 whatever, those calls would be, worth a lot at that point. So I like those a lot. The NVO July 17th calls. Okay. Next one we're going over is open. So Opendoor. Now, yesterday we did have a little bit of selling, but we do have this handle forming on the smaller cup here. And from that handle forming, it should take us up to this basically 790 range. Now, we're targeting the 6 straight calls for July 17th. So this would give us, an extremely nice move, closing this cup. And from that, those calls would be in the money by, $1 to $2 roughly. So that's kind of the worst case scenario. Best case scenario would be trying to form a larger cup towards the upside. So I do like the 6 straight calls for July 17th. Okay, we have 1 minute till market open. Almost through this list, so almost timed this perfectly. Okay, so for plug here, we have this cup forming to the upside. Now, in the pre-market, we have pulled down to the 357, okay? Which means that, can this be a handle forming to the upside to complete this cup? Absolutely. So I really like the 4.5 calls on plug for July 17th because we have multiple cups forming. Let me just kind of show the weekly. Weekly won't show that well because of the price action. But there are multiple cups forming here. And from these multiple cups gives us, plenty of opportunity to the upside to grab some of this premium. So for plug, I really like the 4.5 calls. Last one we're going over is XLF, which is basically the SPY financial sector. Um, the calls that I want are the 53 straight calls, because we were at the lower Bollinger. Currently, we're at the 51.62. If we get any upside towards this 56 to close this cup, then the 53 straight calls are going to do very well. Now, the 53 straight calls for July 17th are super cheap right now still. I think they're only like 60 something dollars per. So if we get our upside, that's going to do extremely, extremely well. Good morning, everybody. You don't short Marvel yet. Marvel's going to be a company kind of like Micron, where you're just going to see, billions and billions and billions continuing to pour into it. So that's not ideal. It's not something I'm really willing to short into just yet. Now I want to look at the SPY here, because obviously we did have a little bit of a sell-off yesterday. But there's a crucial level that we have to look at, is that currently we're at basically the 10 MA. Yesterday we had a rejection of the 5 MA. We talked about that from that 5 MA rejection, we would start pulling down and start targeting this 20 MA again. So even if we're doing a 10 MA test, the real target over the next few sessions should really be towards this 20 MA. Because either you're going to have that 5 MA test to the upside and have the breakout, or you're going to basically reject your 5 MA, and from that 5 MA rejection usually leads into that 20 MA. So that's kind of the target over the next, week and a half, is that we should really be looking towards that 745, 748 range, because remember the 20 MA will be pulling upward as we pull downward as well. So if we don't claim some crazy support today, and that means like all the way above the 5 MA again, basically have a 10 MA rejection, pull to the 5 MA, see that fully retest, then that 20 MA is kind of our target. Now, based on some of the structure we have here, this looks absolutely terrible. This looks like a really large Head and Shoulders trying to build. Okay. Which is telling me that very likely the target is trying to push towards that downside. So if we could pull towards that, guess we're already in the upper Bollinger currently. That would make really nice puts. Hold on, I need to check my phone really quick. So the puts that I'm wanting to take here will be the 752. I know that might be a little more expensive, but I want to be able to really capture some of this downside today. Now again, I'm not suggesting taking these. We're not going to be watching these puts very closely today, but the downside target is from upper Bollinger to the 20 MA, and from that 20 MA to lower Bollinger. Okay, if we have, potential runners. So basically shorting to that 752, which is why I wanted the 752 puts. Really just want to hit that target and be able to profit. If there's room on runners, then I'll let them, capture more of that premium. But I set my conditional stop loss order to 752 07. It says 06, but close enough. But I have that set so once we get this move downward, it'll automatically take, 80% of my contracts, and then we can run the runners to the downside and capture more of that premium. So that's one trade that's basically already gonna happen in a couple seconds here. Then we're gonna go over some of the other trades that we're looking at. Now, just looking at Mark, so I know that we have the 124 calls for June 18th. Mark is currently at 118, almost 119. Remember we were buying those calls at 114. Reply, still breaking out a little bit, so we might go over that position. Starbucks doing well today. Let's see. Still sitting there closing cups, so that's good. Uber is doing well today as well, which we've been expecting a cup and handle breakout on Uber. So let me just pull Uber up here for a second. So on Uber, I know there's kind of a lot going on with the drawings, but we have been targeting some of these cups to the upside. We've bought at the lower Bollinger, and we're essentially trying to see if we can at least get this smaller cup filled. Now the smaller cup goes all the way to the 81, so we have the 80 straight calls for June 18th. We only need to see an additional $7 of upside, which might seem like a lot, but it's definitely within reason to close this cup to the upside, especially when we are starting to reject the bottom here. We have not closed this inverse cup to the downside, which means that this structure still holds this inverse head and shoulders. I know there's a lot of drawings on this one, I apologize. But with that inverse head and shoulders, if we can get the breakout here and not continue breaking down like we have over the last couple sessions, then we should be trying to target, the top of that cup. Top of that cup's at the 81. We have the 80 straight calls, so those should work out very nicely. Yes, I did take the SPY puts. See, we're pushing up a little bit, which that's perfectly fine for me. And the reason why is because if we're forming this cup here, then from that cup top, that's kind of the short entry regardless. So kind of same deal here. Looking to see if this cup top will give us the handle all the way down and if it'll reject. If not, then we will see, potentially cup form, handle, and pull to the upside, but not worried about the puts right now. Again, I'm targeting the downside on today. We are currently at the daily Tenma, which the Tenma is the 752.58. So we're basically right at that level. This looks very indicative of doing a Tenma test. So still expecting that downside. I'm not planning to average down these puts just yet. I had that original buy-in and I'm completely fine with that currently. Okay, so just give me a couple seconds, everybody, because I want to look through something really quick. Sorry, I'm just getting some of these orders put in really quick on the options we went over this morning. Just one moment, everybody. Okay, sorry about that. Okay, so for SPY here, we're looking for our downside target should hit literally any second now. Our VVIX is currently at 90.69. So waiting for this exit really quick. Again, my stop loss, or not my stop loss, but my market conditional order is at the 752.07. So looking for this to hit here. Any thoughts on PDT? We'll check it out in just a second. I just want to make sure we get our exit. Let me scroll up to the HIG today. Let's see what's going on with that. So the HIG is buying a little bit. It's at 79.79. Well, technically 79.80. Just hit that range. Just waiting for a few cents down and then we can go over some other stuff, but just want to make sure we hit this exit. Come on, a couple more cents down. Should be trying to aim to close this inverse cup. There we go. Okay, perfect. All right, so I want to look at the HIG. So HIG still pushing down over the last few sessions. Has not been able to complete some of these upside cups. It's just been constantly falling. So I want to look at something. Now on the daily time frame here, we do potentially have this cup and handle. So if we're able to see some quality buying out of HIG, if we're able to see the market kind of buy this selling up, have a successful 5 mile test to the upside, then that's, going to be perfect for the market. The HIG isn't showing a whole ton of selling in here just yet. I know a lot of people are really concerned, but that's kind of what we're looking for to start really seeing selling. Um, major candles. Okay, we're looking for a lot of continuation within the HIG. So far, we're not seeing that just yet. It can happen, but on the daily time frame, it's not really telling us very clearly that, we're entering a sell-off. Now, volatility is at the 90.77. The low of the day was 90.55. The high of the day was 91.50. So this is telling us that dealers are not hedging as much so far. Now that could have been because they are buying up in the open. So if we continue seeing this tick upward, then that's going to be, very indicative of selling to the downside. But so far, the volatility doesn't look too terrible. And as well with the HIG not looking very terrible, it makes it hard to look at this all and say that things are not going to go very well. So let's go back to the SPY here. Am I still in the HPQ puts? No, I went ahead and exited those yesterday, but those should be hitting target pretty much perfectly. Um, I did hit the 25 this morning. A little bit of a pull upward, but let's check out Dell as well, because this will be following Dell. Now, Dell on the 30-minute time frame, or hourly time frame, excuse me, having this very nice head and shoulders building. So can we see this entire range taken out? Potentially, not really something I'm fully anticipating yet. But those HPQ puts did very well for us. Did exit yesterday. I still have the SMCI puts going though. I'm looking for, again, closer to that 38 range. So if we're going to see the market bounce and everything, then we might have to reevaluate those puts. I'm still holding a couple of these put runners. Even if we push to the upside, that's fine for me. Am I planning to take calls now? No, I'm not really. The PDT rule changes, I think they're good. I think the minimum on smaller portfolios, I believe, is 2,000 for those to open up, which is super reasonable compared to the 25,000 that it used to be. Um, it's hard for me to really put my thoughts into it because I've kind of had PDT for, multiple years. Um, I think it's going to be a good thing for traders to be able to recycle their trades. But it can also come back to bite you. So it's one of those hit or miss things. But overall, it does give you a lot better ability to maneuver things. So I think that's a positive thing. Sorry, I still have my cough, everybody. So if you hear me randomly cutting out, that's because I am trying not to cough into the mic. So our Uber calls are back doing well, Starbucks calls are doing well, open calls are doing well, and our fig calls are doing well. And I did take a couple of the options from this morning. So I took the plug calls, I took the XLF calls, which are doing really, really nice. And I did take the GDRX calls. I'm waiting on some of these other ones. But yeah, a lot of good opportunities here. Currently that whole watch list is pretty much all in the green right now. The ARDX calls are up 90%. Those XLF calls are up, says 70%, but mine are only up 20%, so nothing too crazy on that just yet, but those are starting to gain quite a bit of weight. So the GDRX position is the 2.5 straight calls for July 17th. Calls are likely going to be filling around the $60 range rather than that 55. Currently I did have some spy puts going. I still have a couple runners going. Um, Not really worried about those. Made quite a bit of profit already on this downside move. So that trade worked out really good. I just want to mark that out because I do like marking out the trades that go very well. So we were able to capture that very nicely. Now, I'm not really adding to my put positions too much right now. Even though I do think the downside is very valid today. We do have to contend with this potential cup. Give me 1 second, everybody. I need some water. Sorry about that. I've still been dealing with this really bad cough and it's been making my voice cut out still. Anyway, for open, says open calls I have average of 0.12 for 618. What are the expectations? We'll go back to open. Open. So the expectation on open is that we see this smaller cup formed here. From the smaller cup, we're trying to build a handle to break out to the upside. Now, for that upside breakout, we have quite a bit of ranges. First, we're targeting this 6 strike because this forms a smaller cup here. And let me clean up some of the drawings. Just 1 second. But basically, there's a ton of cups to close to the upside. Once we close this cup at the 6 strike, there's the basically that $7 range, $8 range. So we'd be looking to close that, build a handle, continue upward. Let's repeat. So simply looking for some of these cups to close and continue heading back up to the upside. Sorry everybody, my cough's actually really bad, so give me just a couple minutes. Alright, sorry about that. Okay, so the ones that we kind of want to look at again to reevaluate is ZS. We did have the, let me just double check what we had watch listed. I never took those calls, but I know they ran really hard the other day. So we were targeting the June 18th 190 straight calls. Now, those did end up doing very well that first session we decided to take them. Um, we saw this move basically from the lower Bollinger to the 20 mil. That was roughly a whole $30 of upside. Um, However, it's been breaking down since that point, and what this breakdown potentially could be forming is this inverse cup with a handle. So we have to be really careful with these. I think since we did have this rejection to the downside, that currently those calls are not as good as before. Hold on. Derpy asked me a question 1 second. Okay, so he's wondering where's the calculator on the mobile app. Wish I could show this on the screen. Um, Now I'll take pictures and show how to get to the actual calculator on these. But for example, on Zscaler here on my phone, you press Zscaler, go to the options, excuse me, go to say June 18th, go to the option that we were targeting. So say that 190 straight call to the upside. You press single option in the right corner, press where it says buy the ZS 190 straight call at the top. You just press that arrow, and that takes you to the option page. Then you can click calculator in the area there, and then you can fiddle around with it. You can put the underlying price, you can put the date of the calculation, all that sorts of stuff, and that'll give you, you know, very quality, excuse me, pricing on some of the options. Give me 1 second, everybody. I need to drink more water. My throat is just cutting out so bad today. All right, is there any other options that people are in right now that we need to go over? So I'm going to cross off ZS for now. Okay. We talked about Uber. That looks good still. We talked about Starbucks. That looks good still. Let's talk about hymns because we did have some calls targeted to the upside. Now, these calls, which I kind of kick myself over not getting, are the 28 straight calls. Now, as you can see, um, these 28 straight calls are doing very well. Basically, the entry was at that 20, 21, $22 range. These calls are now well in the money, which is surprising. They're actually like $230 calls currently. When we originally purchased or were looking to purchase these the other day, they were, I think, 20 something dollars per. So this is definitely getting added to the list of doing very well. Sorry, 1 second, everybody. Sorry about that. Okay, so those him calls did super well. Basically those things ran over 100%. So super happy about that trade. Um, just unfortunately I didn't have the options in it, so I'm kind of bummed about that. But we can add that to the list that has basically been a massive success. Now I want to go over Elf Beauty really quick. So on Elf, let me delete this random cup that's floating there. We did buy at the lower Bollinger at that 49 range. Pulled up, started pulling back down again. Um, what we're trying to really accomplish here is that we're trying to catch this cup and handle to the upside. Okay. From that upside cup and handle, that would take us to the 63. So we currently have these 61 straight calls. Um, so far it's looking good, but if we see an additional breakdown today, then tomorrow we'll kind of reevaluate that position. So for now, I'm just going to write that down to reevaluate for tomorrow. Sorry, and I'll go over some other symbols too, everybody. I just want to make sure that the positions that, excuse me, that people have been taking from the list that we're actually, you know, properly going over them. Now for Beam Therapeutics, this has been looking super, super solid. Now the strike for Beam is the 34 calls, okay, and that's for June 18th. Now what we're trying to do here is that there's multiple bullish structures building. We have that cup. From that cup, we have this nested cup. From that nested cup, we are starting to build a handle, which would basically break us out, you know, to this larger cup at the 36.44. Now, we have the 34 strike calls. I personally don't have some of them, but I'm actually very tempted to buy some based off of the structure today. But these are the 34 strike calls for June 18th. And the upside breakout on this is looking very, very, very solid. If we do get the bounce off this daily 20 mil, that's going to take us all the way to that 34. So should these run basically at the money? They definitely should. Could they run, you know, deeper into the money and potentially hit that 36 range plus? The possibility is definitely there. So I'm going to mark this to check back tomorrow and see how that's doing. Now, another position that I want to look at is Reply, or whatever that company's called, because we did have puts targeted into this, excuse me. And with this seeing this cup breaking out to the upside, we see that on the daily time frame, we have two multiple Bollinger or multiple upper Bollinger moves here. So we had the day one, secure the level, day two, higher high, pulled down, retested the 5 mile, pulled back up again, day one, secured the level, day two, higher high. Okay, so the 9 strike puts are what we're targeting, or excuse me, the 8 strike puts for June 18th. Now, simply, we're just trying to find a handle on this cup before it fully breaks out, you know, to the upside. Those positions still look fine. If we get continued pushing from this point, then we'll reevaluate that position. But I would not kind of hesitate to add to those puts. I think those are very fine. because we should be seeing some downside still. Um, this is a very aggressive push into the upper Bollinger, and usually from those very aggressive pushes, we get very adverse downsides. So I do like the 8 strike puts. Um, Assuming we go down even to the 20 mil here, that's going to pull us basically in the money by a whole, $2, potentially even $3 if we push below that. So let me go ahead and mark this to check back for tomorrow. Oh, so the impact of PDT on volatility is going to be basically a non-factor. Um, you have to remember, majority of the stock market you're trading against isn't even humans. It's mostly machine-driven buying and selling. So if we're going to be seeing, um, potentially the new rules affecting volatility, um, we'd have to have a market that is mostly driven by smaller portfolios. And unfortunately, that's not how the market is. Um, this market change is going to be basically no impact on what's going on with the overall market. Um, this just simply makes it so people with smaller portfolios actually have a little bit more of a chance to navigate their options. But it won't really be affecting the market any one way or another. Small portfolios, unfortunately, aren't the ones trading the majority of the market. So let's go over Uber one last time. So for Uber, we're targeting these breakout cups to the upside. Okay, and I know there's a ton of drawings on here, but the first cup we're targeting is this one right here. Okay, and where does the top of that cup lead us? Leads us basically to the 81. So that's simply what we're looking for. We're looking for continued bullish structure building off of the bottom here, which we see a smaller cup, building that handle. From that handle should help push us into that breakout, and simply just targeting that 80, that cup at the 81. Now, there's potentially a lot more upside to this. There's so many gaps to the upside that can be claimed here. Um, but that's not really what we're looking for. We're just looking for this to run in the money, um, from basically being a super cheap OTM contract. So that's what a lot of these contracts we're setting up are attempting to do. Be very, very cheap entries that have some actual runway to it. Um, so if you can allow it to run towards the strike, that's very, very ideal. Not every trade's going to work out towards that way though. Now, one of the last ones I wanted to go over from our list is Boeing. Okay. Um, with Boeing here, we originally had the 245 strike calls for June 18th. Now, the reason why we took those was because of this lower Bollinger move. Okay. However, we are starting to see a little bit of a breakdown from that move. Okay. We pulled to the 20 mo. Now we're back to the lower Bollinger. And what does this kind of look like? Starting to form a head and shoulders. So potentially this can get pretty gross to the downside. However, with us being at that lower Bollinger, that's telling us that there really isn't a whole lot further room to push downward. And if that's the case, then we're trying to target the upside. Now, with that upside target, that would be assuming that we're breaking past this larger potential head and shoulders building. And that, we'd have to break past this smaller head and shoulders. Okay. But the upside target's really good, and those contracts are just absurdly cheap. Yesterday they were even cheaper. I think yesterday they were only about $30 per. Currently they're a lot closer to the $51. Um, but if we could see some of this bear structure break, then this upside cup looks really nice. And generally, when you get to the lower Bollinger, you do find some upside reprieve. Now, with Boeing here, there's been a little bit of a push where we push downward, have the 5 mile test to the upside, push right back down, 5 mile test to the upside, push right back down. From this major push down here, we have been seeing some upside buying. Now, what we were originally trying to target was not just that downside there, but we did see that, okay, potentially we have a cup formed here. If we have potentially a cup formed there, then what are we looking for? We're looking for a handle for the upside breakout. Okay, so that does look very solid. Okay, it looks very tricky, but it's still very solid. That cup top has hit. Okay, so technically there is still some bullish structure in here. Um, from this low here, technically this is a higher low than the previous range, which means that as bearish of structure as this is, this can actually be very bullish structure too. This could be the cup closed there. This could be a handle forming on that larger cup, and from that handle, or from this, handle slash nested cup, looking for that additional cup to the breakout on the upside. So those calls still look good, but we will talk about them tomorrow if necessary. So SPY here, still building some of this upside. So I do want to circle Boeing to discuss tomorrow. And I'm just writing down that HIMS did hit target. So that's very nice. So out of this list so far, out of last week's list anyway, we've had the SoFi puts hit, the HPQ puts hit, the Oklo calls hit, the HIMS calls hit, the IWM calls hit, and again, those are all purchased basically super out of the money. And a lot of those ran, into the multiple dollar range. The Oklo calls ran all the way from a dollar something up to 700, 800 something dollars. I mean, from 100 something to that $800 range. So those ran very, very, very hard. The watch lists I've been posting in Discord, but these watch lists probably starting the next few weeks will just be going into my private area. So that's what that kind of membership is looking for. You'd be getting access to all these trades and everything, and we'll still be going over them on the stream and whatnot. But that's where I will be posting them. We'll also be making an equity area that is free on the server where we will be discussing all these different trades as well. But for specifically those lists, that will be in my section. But individually, we will be putting each of these symbols kind of in their own spot on the server for everybody that's free. So one way or another, you'll have access to them. But they are on the Discord server, so make sure you go ahead and join that. It is free to join, so SPY here, we're seeing that we have potentially the smaller cup forming here, which that's forming basically a handle on this cup that's currently being created. Still not fully set on that yet. Um, I know a lot of people are thinking that we're going to be going into some, full-on sell-off. I'm not entirely sure about that yet. I do know that within the daily time frame, we had a pretty large rejection of the 5 mile yesterday. And currently we're testing the 10 mile, but we're very due for a 20 mile retest. The last time we tested that level was April 8th, um, you know, literally months ago. Um, so the SPY is very due to hit that 20 mile range. But if we're going to see a bounce to the upside, then currently the price action that we're seeing is what we need to be seeing. The 10 mile is currently at the 752.64, which means that the upper bounds of that level is all the way at the 754.64. So we have not hit that level today. So potentially we could still be fully testing this level. Something like that. Which on the screen looks terrible, but there's a purpose to this, so 1 second. And give me 1 second, I need to drink some water. Sorry about that. Okay. So yes, we're on the upper Bollinger on the 5 minute time frame. Okay. Yes, this is usually the put entry. Yes, I think those puts look very, very, ideal if we're not going to have the breakout. Now, the reason why I have this blue box marked here is because this is where the 10 mile is currently located. As you can see, even from the overnight and the pre-market, we've been working in this range very aggressively. Now, there's two parts to this range. There's the upper bounds, which is above the 10 mile itself, and then there's the lower bounds, which is below the 10 mile. We've been currently testing the lower bounds for, the majority of this morning, plus last night and the after hours and everything. So do we need to continue testing the lower bounds? Not entirely. If we're going to be seeing a bounce to the upside in the market, then potentially this target needs to start testing the upper bounds of the 10 mile. Okay. Now, if we're going to find a rejection, then what we are looking for is some of this bullish structure to break down. Now, we do actually have a little bit of a breakdown of this structure that is very sneaky. We have that inverse cup there, but the problem is with that inverse cup is that this push to the upside has slightly invalidated that. So it's not like we're going to form inverse cup and then handle. We'd have to form something far more bearish to, do anything with this prior structure. So currently we're dealing with this cup, potentially forming a, excuse me, forming a handle to the upside. And from that upside, what I'd be targeting is really to see, are we going to break above the 10 mile and start grabbing towards that 5 mile range again? Or are we going to pull up towards the, excuse me, the upper bounds of the 10 mile and then reject? Sorry, I need some water, everybody. Apologize, my voice keeps cutting out today. Still dealing with this pneumonia from last week. Even though it's a lot better, still dealing with it though. Okay, so that's kind of what we're looking for. We have the cup built there. We have the handle, which is also a nested cup. From that nested cup, we should be seeing the handle to the upside. Now, we'll see if this takes us above the 10 mile level or if it, really tries to break us out and fully claim this entire selling range. Which if that does occur, then this is called a fair value gap. Excuse me. So fair value gaps are basically, and I want you to think about this in a really simple way. So imagine you have just a standard, paved road, right? Um, the road basically should have been up here. Now, what happened is that whether a rock or something was in the road, but something put a massive chip or a dent in that road. Okay. The market's saying that we're supposed to be trading up here. We had the fair value gap to the downside, which was, news driven, earnings driven. I think Broadcom had something with the guidance that didn't do well. But if the market is wanting to get back to where the road was, basically road's up here, we have the pothole, whatever in the road, have to get past that pothole and get back on the road again. So that's what a fair value gap does. It kind of just fills that range of whether buying or selling that was caused from an adverse reaction, um, usually news driven. So that's kind of what I'm looking for here is even though many people are starting to get pretty bearish on the market, I think this could be a fair value gap to the upside where we've basically filled this entire gap and we get back on the road again. Okay, getting back on the road again would take us towards that 5 mile range on the daily time frame, and from the 5 mile, we would pretty much be having a pretty large bounce to the upside. Now the thing about today is even though we do have the 10 mile to contend with, we also have the 5 mile to contend with as well, because the 5 mile on the daily time frame is at, I think it's 756.57, which means, where does that set the lower bounds of the 5 mile? That sets the lower bounds of the 5 mile around this 754.60 range. Okay. So there you go. We have 10 mile currently, 5 mile right above us. We have a lot of market structure telling us that very likely we're trying to push towards that 5 mile range. We're not fully there yet, but this is how you get there. So I'm very hesitant to, continue taking those short positions. We had that very good trade this morning with the puts. Um, but one thing that we did identify really early on is that the VVIX was pulling down, and it's even pulled down much further since then. It was at the 90 something, it's at like the 90-50 range. It's currently at 88.75, so it's been pulling down basically a whole $2 on the day, whole $3 on the day, excuse me. This is telling us that dealers are not hedging positions, which means that we can really see some major buying to the upside. Now, another thing that we see here is that even though the HIG was starting to sell a little bit, um, look at the HIG on the daily time frame. This is really not indicative of selling here. Sorry, I have all these squares and stuff going on. But this isn't really indicative of selling. Selling is when we have a ton of these candles going back to back, Currently we don't have that. We have bullish structure formed in HIG. We have this cup and the handle, which is kind of telling us that the market wants to push into all-time high territory if we have this breakout to the upside. So the HIG is looking very nice. Our volatility is pulling down on the day. We're having a bounce from what's looking like a 10 mile test towards the 5 mile. Okay, so we could be headed up quite a bit today. Not just today, but over the next, couple sessions. This could be a huge chunk of liquidity being built to really launch us upward. So Be careful if you're trying to short in here, because that's kind of the upside we have to contend with today, is that this can basically pull this fair value gap, fully fill that range, which we're already very, very close to doing, and then we'll be back on the road again. Um, a successful 5 mile test to the upside leaves us with one range above us, and that is the upper Bollinger. So if we do have the successful test to the upside, then what comes from this? Upper Bollinger. So this potential dip that we're having right now could become massive, massive fuel to really launch us to the upside. Now, I think there was a question about the SOX puts. If we're expecting upside, can we take the SOX puts? Absolutely. I would try to take the 5 strike puts for next Friday. So I actually want to take a look at those really quick. Just 1 second. I just need to open up SOXS on my phone really quick. So those would be the 8 DTE 5 strike puts, which are currently only probably about $42 per, which I think those have, a huge potential to the upside. So we're going to go ahead and take a couple of those. Just 1 second, everybody. Now I want to look at Starbucks because Starbucks is having a little bit of a pull down here. So Starbucks daily time frame. Really looking for this cup and handle to form here. On the hourly, something not filled. On the hourly, we've been dealing with kind of annoying structure. We have the cup right here, breakdown of that cup into this cup right here. That cup's still holding, and now we have an additional cup building right there. And from that current cup, potentially starting to form a handle to the upside. So I'm looking for this to break out. If this continues breaking down, then that's not going to be ideal at all. But we're looking for the upside breakout because again, that would allow us to really claim some of this cup to the upside, and our positions would be very good at that point. So potentially this could be forming a handle currently. A little hard to say though because these candles are just terrible. Not a whole lot of conviction on both sides, so we'll see where that goes. Now, for the SPY here, have that break it out of that cup forming there, which this is just kind of telling me that this larger cup is looking super, super good. So if we can get a dip on the handle today, of these smaller cups, then that's going to be very ideal for calls to the upside. It's kind of what I'll be looking for. But it doesn't mean we're out of the, bearish conditions fully yet. For which position? The SOXS? The SOXS are just for next Friday. So whatever next Friday is. I think the 11th. No, the 12th. So I'll type it on chat. I meant 5 puts, excuse me. But yeah, this is looking very bullish right now. Especially when we've been seeing volatility really pushing down on the day. I mean, this is a pretty large push to the downside. This is the type of downside push that is really trying to get us out of that selling range on the SPY. So I like the upside a lot right now. No, I'm not adding to the 752 puts anymore. Even though this is our range to add those puts, yes, we can form a handle here, pull down, and then head upward. That's what I would expect out of the liquidity. But one thing I don't like to trade against is fair value gaps. Because fair value gaps, the market is going to sit there and try to buy or sell out of that range very quickly. So far, we're seeing massive buying out of this range very quickly. Okay, which is telling me that very likely they're trying to close this fair value gap to the upside. Trying to short against that will really get you nowhere, unless you're just trying to go for these smaller moves like we did this morning. But even with that smaller move, we were doing that kind of in a bullish way. We saw this cup formed, and from that cup top, we were just simply shorting the cup top into forming the handle. We were able to do that, and now we're having, pretty large bounce to the upside. So I am kind of expecting this entire range to be taken out. So I'm not too keen on shorting into that just yet. Can I take a look at NVIDIA? Yes, I can. See NVIDIA. I'll look at the hourly. We'll delete some of these older drawings on it. Just 1 second. So NVIDIA here has this very large inverse cup formed on the hourly, but it's actually very tricky too, because this is a even larger cup. Okay, so the cup's bullish, right? Inverse cup, not so bullish, fairly bearish. But it has not invalidated the previous cup either. Okay, so this bearish structure, while it's still very bearish and can absolutely take us downward, it's still looking very good to pull us out of this range. On the 30-minute time frame, which we'll be able to see on the 5-minute time frame too. That can't really be counted as a cup because it hasn't validated on the bottom. So I want to see more structure built in here. Um, we need to really determine if basically we're stuck between two structures, right? We're stuck between this larger inverse cup. Let me go ahead and turn off the Bollingers so we can see this larger inverse cup and then this larger bullish cup. Okay, larger bullish cup has not been invalidated, and because it hasn't been invalidated, it's still, very, very, very present. But we can't deny that this looks terrible. Um, but with this inverse cup, we should be expecting a handle to the upside before pulling downward regardless. So this handle is going to be very tricky because this handle can either be this inverse cups handle, or this could be the larger handle for the bullish cup. So that's kind of what we're contending with here, is that we do have some upside, but we're still stuck between, some major key ranges here. Either we're going to have the larger cup and handle form, or this is going to be that larger head and shoulders to the downside. But the key right here is that we have not invalidated the previous cup, and that holds a lot of weight. So kind of stuck between two ranges, a little hard to determine which one's going to take so far, because I think there's definitely a case for both sides right now. So we'll have to watch for this. We want to see further structure built before we really make any major determinations on it. Yes, I can take a look over next. And that's literally the symbol name. If I can find it anyway. So for next, let's check the daily time frame. I'll check the weekly for a second. Okay, so for the weekly, first thing we identify here is that this has a ton of consolidation. Okay, absolute ton of consolidation in here. However, on the weekly time frame, you do have some good structure building. You do have a very large cup. That cup has not invalidated or has not been invalidated, and potentially building the handle. Okay. Now weekly time frame, again, that's a lot of time to contend with. Now on the daily time frame, we do have a very nice smaller bullish cup there, which is starting to form what's looking like a handle to the upside. So targeting this upside actually looks really nice. Would be able to target all the way to that basically 1128. So I want to look at the options on this. And let's look for July. And what range were we targeting? That 1112 or 1128? So the 11 strike calls for July 17th look super, super, super good. They're extremely cheap, and if those run basically at the money slash in the money, those will go from, essentially like $17 a call all the way to about 85 to 120. So those look really nice, super cheap, and I actually want to get this added to our watch list because I actually think I like those a lot. So one moment. So these are the next 11 calls for July 17th. Okay. A lot of bullish structure here. I think it looks really good. Um, has a very high probability, I believe, of having that upside breakout. So I'll type that in chat really quick. You're very welcome. Alright, so that looks great. On SPY here, this is kind of reason why I really don't want to short right now. This fair value gap to the upside looks very, very, very strong. Um, and we also see on semiconductors, we see smaller cup built from that cup should form a handle to break out. For semis, that would take us basically all the way back to the 608. So let's just go ahead and mark that. But this looks very good. Um, we also know that our volatility has been beat down pretty hard today. We're having a little bit of a push upward, but we have been, you know, kind of pushing against that lower Bollinger for a majority of the morning. So a little bit of a push upward isn't unreasonable at this point. But it did pull all the way from the 91.50 down to the 88.75. So that's super indicative that dealers are not trying to hedge the downside too much. So with semiconductors, expecting a little bit of a downside before we continue heading up. I wish I could draw these cups better right now. So that's kind of what I'm looking for out of that. Which out of SPY, that'll give us basically a small handle to the downside before we have that full-on breakout. So it is looking good. It is looking like it is building. We have the same structure out of QQQ as well. We have the cup formed. Just need to build the handle and have the upside breakout. Which that upside breakout potentially could take us all the way to the 742 today. So today could be a very bullish day, as much as we did have some of that earlier selling. I'm going to be mute just for a couple minutes, everybody. But during this time, we're just going to just quickly watch over the SPY. I just need to get something to drink really quick so that my voice doesn't cut out on us. But let me make a note really quick. And what time is it? It is 10:46. Let's just say 10:52-ish. Okay, so I'll be back in like 5 minutes, everybody. Just gonna get some water and whatnot. So be right back. Alright, I am back. Sorry about that. Okay, so let me see with the ad frequency. Um, I'll try to get that changed to not post so often. I don't know why it's been doing that. Do apologize for that. Now, what we're looking for here, I just want to look at the 1 minute time frame for a second. A lot of bullish structure going on. But we're seeing with some semiconductors, we're seeing this breakout of the handle that we talked about. And with this breakout, this should take us all the way up to the 607 today. Yes, it might chop to get there, but that's looking very, very reasonable at this point. We do have the bullish structure supporting that as well. Excuse me. Which means that, we would be going basically back to this 756 range, which that's where the daily 5 mile is. So this would be essentially a test of the 10 mile, a rejection of this test, which that's a bullish thing in this sense because the 10 mile is below us. Rejection of that level to the upside is a good thing. So we should be heading towards this 756 today. Not really seeing structure telling us that we're going to continue breaking down. Our volatility is still pushing pretty low today as well. Semi is breaking out. QQQ working on building that handle on this smaller cup. Excuse me. Which would take us back to the 741, 742 range. So both of these are looking, or all of these are looking very, very solid. Now let's go over NXT, or next I mean. Or now, excuse me, because now it's been having an upward breakout, which is following a lot of the same pattern, where it looks like it's just trying to buy up the fair value gap that we identified on the market. Now, this breakout in now should take us all the way towards this 128. So quite a lot of room on that. And this is a larger cup here. I'm gonna delete this one. I'm gonna put this cup right here. So we know that that cup has been, built and formed. From that cup, we're expecting a handle to the upside. Um, all the liquidity is there, and we're seeing a pretty good push throughout today, throughout the low of the day. Um, already up a whole $10 from that's selling in the after hours yesterday. So the market's looking very, very, wanting to fill this fair value gap to the upside. So I actually want some of these 756 calls, especially because we're seeing pretty much nothing but just non-stop bullish structure. Cup formed, cup formed, cup formed, cup formed. Looking very solid. So I do think I'm going to take some of the 756 calls. Now again, if you can't watch the position and everything, because I'm not going to be watching just the SPY today, then please don't take them. You know, 0DTs have a ton of risk to them. But with all this other structure, it's telling me that very, very likely we're going to be seeing the upside that we're expecting. So I'm entering No, it's not at the Bollinger, but this is a little different of a day because it's a fair value gap. With fair value gaps, the market basically is telling us that we're not supposed to be trading at this range. And I don't want to move that box because that's where the 10 mile is. But basically the market's telling you that we pulled to this range and we're not supposed to be here. We're supposed to be up here. And that's why we're just seeing, you know, non-stop ravenous buying to the upside. Now the SOX puts should be doing very well for everybody so far. Now for these calls, I am going to set the conditional order to the, excuse me, the 756.03. So basically once we hit the top of this cup, it's going to clear my calls for me. So basically right there. Just give me 1 second, I need to cough. Sorry about that. But yeah, when we have a fair value gap, and again, I always use kind of like the road analogy, but imagine this is where the road's supposed to be up here. This is where the market's supposed to be trading at. But then we have a big old pothole or you know, a bump in the road, whatever you want to call it. Um, the goal is to get past that to get back on the road again. Um, that's exactly what we're seeing out of this, and this is called a fair value gap. Okay. Um, if you're able to identify fair value gaps, you can make a lot of money because that's telling you exactly that, oh yeah, we shouldn't be in that range. We're going to buy to the upside. Not every gap is a fair value gap. Okay, but this one very specifically is because we had, you know, quote unquote bad news drive us down through this range, and the market has entirely bought that range up. Okay. Um, which is just telling you that the algorithms are saying that the orders and everything don't support this range. They support being above that range. Apologize that I keep cutting out today. I'm still dealing with this pneumonia, so. But yeah, that's what the expectation should be on SPY right now. And our 756 calls are already up quite a bit. They're still fairly cheap too, so if we're gonna hit that level, um, I definitely wouldn't say against it. If you're gonna be actively sitting here day trading today, then that level looks super, super solid. Um, and those should pay off very well. So just be cautious of it, obviously, but I really, really do like those calls. We're seeing very, very heavy push out semis. I can't talk today, I apologize. We're seeing a very, very large push out semis, um, which is telling us that extremely likely we're heading back up to the 607 range. QQQ, very supportive of that as well, heading back to the 742. And our volatility is still ticking downward. Um, you know, potentially we could see this hit 87 today, maybe even less than that. So I like those calls a lot. I think they're cheap. And they obviously have the ability to print very, very hard. Is it possible that a fair value gap can be rejected? Hold on 1 second. Let me say hi to my daughter. Sorry about that, everybody. I had to say bye to my daughter. Um, Now in CRM look super good. Let me look at CRM just to double check, because that is Salesforce and not tech. Well, I guess we already have it mapped out here. Um, yeah, you got a lot of bullish structure here. CRM looks super good. It's looking very solid for a push all the way basically to that 268. Will it take some time to get there? Obviously, this is something that'll take, probably a few weeks to a month, but the price action is building there. You have this very well-defined cup starting to build the handle on it. The handle's looking very good to the upside, and that first gap that it should knock out is at 235. Excuse me. So the 235 gap, very likely to hit. I wouldn't say it's very soon. Um, Probably about 3 weeks out. You should be expecting that level to hit. From that level, should be expecting a little bit of downside to build an additional handle to hit the next level, which is that 268. Okay, so that's kind of the expectation on Salesforce. Looks super bullish. Okay. Let me go back to the SPY really quick and see what's going on. Yep, and we're getting our upside push. Remember, I have my conditional limit order set to the 756.03. Can definitely push well above that today, but that's where I'm willing to grab some of this profit. Very short-term position. We just grabbed those not even 10 minutes ago, and they're already up very significantly. Now, to answer your question, can a fair value gap be rejected? It can, but then it wouldn't be a fair value gap. Okay, so a fair value gap is, and you know, not to run this analogy into the ground, but it's basically like that pothole in the road. It's something that shouldn't be there. The upside of a fair value gap would, essentially be like a rock in the road, right? If that level wasn't supposed to be there, it the road's over here. We have a rock in the road, go above that level, and then pull back down. So that would be like the upside of a fair value gap. But this is the inverse, downside of that, where this is the pothole in the road. Um, you know, the market's telling us that we're supposed to be driving on a very flat paved road up in this level. Well, for some reason we had some pothole, um, pulled us down very greatly, but the algorithms are still saying that, okay, well, this is where the road's at. This is where we need to be. Um, and second those algorithms get turned on this morning, look at what they do. They just buy. And now we're completely out of that range. So, um, if the fair value gap is rejected, then it wasn't really a fair value gap. That's just where the road was meaning to go to begin with. Um, but in this situation, the market's telling us very clearly that no, we weren't supposed to be down there. Um, all of our orders and everything are up here. Let's get back up there. Um, so that's why I wasn't very keen on shorting this today. Um, this is more of a very advanced mechanic. Um, they're very hard to identify, and the fact that we were able to identify it very early was very nice because I know many people would want to go crazy shorting that. Okay, and a lot of people are absolutely burning money doing so. Um, if you didn't heed my advice, then you're probably in that same boat, unfortunately. Um, Today was not the type of day to short against that fair value gap because the market does not want to be down here. The market wants to be at this level up here. Okay. Um, Again, very hard to identify, but if you can, there's a lot of money to be made doing so. See, that's good. You had it plotted last night. Whenever you see and this is kind of why, like, I always go back to buy weakness, sell strength. Buy weakness, sell strength. Well, we had that massive pull down in the after hours and the overnight last night. Well, what is that doing? That's creating a massive and just think about the psychological aspect of it. That's creating a massive shift in the market psychology where everybody's thinking, "Oh my gosh, we're going to be in a sell-off now. Do I need to sell my positions? Do I need to start taking profit?" Because basically we're very close to all-time highs, right? Um, so that's going to be on many people's mind that do I need to sell off here? Is this potentially going to be just the beginning? Or, what's going on? So that puts a very large psychological, um, narrative into people's minds. But you have to remember, again, the market is very machine driven, and this kind of goes back to the whole PDT thing, why I think the day trading rules hitting small accounts is literally not going to affect the market at all. The market is not driven by people's really buying or selling. Okay, it's driven by orders. Now, if the orders are above this level, then the machines are going to go to grab those orders. If the orders are below this level, then the machines are going to go to grab those orders. Okay. Um, Obviously today we started seeing a lot of orders, really picking up above us. Um, Dealers told us very clearly this morning with the VVIX, and again, this huge candle to the downside is dealers literally telling you, hey, we are getting ready to buy the upside. Okay, we are not hedging the downside here. And in fact, not only are we not hedging, we sold our hedges. We sold our hedges here. Okay. So that's how I see it from the dealer perspective and why I had such large conviction on the buying after that first initial bit of selling we did have is that the VVIX pulled down basically like a whole $2 on us in a very, very short period of time. Um, and that's just telling us that dealers don't want that level. Um, Dealers want to buy upward, and we were also starting to see some buying within the HIG, which, again, if the HIG's buying, if the VVIX is pulling downward, then from the kind of institutional side, from the dealer aspect, that's telling us that they're selling their hedges, they're buying the highest, one of the highest echelons of equity risk to the upside, and they're buying at this level. So those were two very large keys telling us the selling is not going to stick very well today. Um, which is why we had such conviction to the upside. Um, and that conviction is obviously now paying out very, very well. Yeah, there really is a ton of different strategies. Um, that's the fun thing about the market too, is that there is a ton of maneuvering you can do as the individual. It's not just watching the charts exactly. It goes so much deeper into that. It's watching the charts, it's learning these different strategies, how to navigate these different strategies, how to navigate what's actually going on. Um, because again, today was a day where bears would get absolutely murdered. Okay, and I hate to use those words like that, but anyone who did not sell those shorts earlier, they're toast. They're not seeing a penny back on those positions. Those positions are beyond toast at this point. Their only hope at this point is hitting the top of this cup, getting that small handle reprieve, and then pushing upward even further. Um, Not the type of day we wanted to short into. Um, Even though we were in that upper Bollinger on the 5 minute time frame, um, you know, by the technicals, it's telling us, okay, yeah, those are short positions, but we cannot short against a fair value gap. Um, I've lost money doing it before, and I don't want anyone else to lose money doing it, so SPY should be hitting this 5 mile range. And what that really means is that 5 miles currently at the 756.92. Basically, by the time we pull up to it, it'll be at that 757 range. We should really expect to close basically at that level. Um, and what that means is that could be a dollar above it, dollar below it, 50 cents above it, 50 cents below it. But we should have a very neutral close, meaning we should be closing at that 5 mile range. Okay. Um, Ideally, we want to close above it. Okay, if the market is going to be bullish right here, then we want to see a close above the 5 mile. Okay, because the 5 mile gets pulled to new levels every opening session. So for example, um, with the 5 mile yesterday, the 5 mile was basically at the 756 range. But with that large pull down, it did pull it down quite a little bit this morning. Um, if we were going to continue downward and say we pull down to the 745, right? Say the market price is at that 745 on close. Well, then that means that we'd be underneath the 5 mile and the 5 mile would have to pull down the next session. So we'd see that 5 mile pull down maybe to the 754 that next session, or maybe the 753 that next session. Um, we want to be above that range because we want to be pulling the 5 mile upward. Okay. If this is really as bullish as we're thinking it is, then we should close above that range. So potentially we can be hitting this 758 area because we would want to pull above that 5 mile and close above it. So that's kind of what I'm looking at in terms of our bullish upside. Do I think we'll fully close this 760 gap today? Not really. Um, as you could see yesterday, we have quite a lot of liquidity built right in that area. So is it very reasonable for us to close above this? Absolutely. Closing above this, basically in that range, would close us above the 5 mile and would grab all that liquidity plus the liquidity within the fair value gap, and we'd be off to the races again. So I think I think that range is very reasonable to target into the close, and that's basically between the 757.20 to the 758, basically 759. Fair value gaps can be caused by multiple different reasons. Okay, they can be caused due to news. So for example, um, say we have something very bad with the news occur, um, with the conflict going on right now, and say that gives us a very large downside, right? So say we pull down very hard, and then all of a sudden we get a tweet where Trump says, haha, just kidding, that didn't really happen. Okay, would that selling be viable at that point? No, because this was news driven. It was news driven selling to the downside. So the market would say, okay, news driven selling, you're not real. We're going to buy that back up, close that gap, that fair value gap, and get back to where we originally were. Um, yes, that's a little bit of an extreme example, but we've had things happen like that before. Um, where it's, with the tariff news, anything else, where we get a very large reaction either to the upside or downside that isn't warranted, essentially. It's outside of what the algorithms were really trying to target. And because of that, that's how you get that, either very large buying or very large selling to occur, to fill that gap. This gap was caused from, I believe, something with Broadcom's earnings. I don't know what. Um, but obviously the market isn't buying that. The market's saying that, okay, Broadcom earnings, we don't really care, and we're going to buy you up. So that's what's happening. So stupid. Yeah, I know. It's a good example though. Um, but that's just how these gaps work. And not every gap is a fair value gap. Okay? It's again, it's very hard to determine while it's going on. Usually it's a lot of hindsight where it's like now that you see this without all the drawings, without the Bollingers, it's like, okay, so what did that selling even accomplish? Um, because from the perspective of the actual buying and selling, like during the trading sessions, you have a trading session there. We closed at that range, sold down all through the after hours, the evening, pre-market, and then here we are in the trading session in the open. And it's like, oh, well, we weren't supposed to be down there. The market was back up in this range. Whatever happened down there, we're just going to buy that up and take the market back to that range. So this is why I always show the night gaps, the extended hours, things like that, because all this structure 100% matters. If you weren't to show the night and the extended, this really shows you what that fair value gap looks like. Just a very minor bump in the road, right? We're basically trading right back where we were. Looks a little different when you have the overnight and the extended hours on though. That little bump in the road suddenly looks like this looming, you know, major selling, but from the market perspective, that really just didn't occur. We closed yesterday at, I don't remember what we closed at. It was like that 755, 754 something. And from then, the market had this major pull down, and so they say, okay, we need to be back in that range, buy it back up. So you have institutions, you have foreign markets. So usually when our market closes, we have the South Korean market, we have the Japanese market, we have um, the EU market. We have markets all over the world that are going to take that news, and unfortunately their markets are not as algorithmically driven as ours. Um, So that's some of the kind of real price action you're seeing where actual people are selling and buying. Um, this is basically telling you that people got very emotional and the algorithm said, okay, too bad, we're gonna buy it. Um, pretty much that's what it was. It can be institutions sometimes, but usually it's going to be those foreign markets. And one thing you have to remember is that when the US markets are open, that's when all the algorithms are turned on. That's when you have BlackRock, that's when you have JPM, that's when you have basically the whole major banking system turned on. Okay. And when they're on button is pressed on, that means that, the algorithms are going to be in full force. Now, when those algorithms aren't turned on, we have the other markets that we have to take into account. So the foreign markets, some of our own markets where we do have actual people just buying and selling in the overnights and things like that. Some of the future markets, but they don't hold a lot of weight compared to what the US algorithms do. Um, Again, the US algorithms are a whole nother beast compared to people just actually trading. And our VVIX is still pulling down. It's looking very likely that we're going to be seeing this push down into like this 87, 86 range today, which is just telling us that dealers aren't even looking at the downside right now. We have the HIG just constantly buying up, which is, just another signal of dealers aren't really looking at this downside at all right now. Have I looked over the beige book? Not yet. I'll read that in a little bit. I want to wake up a little more first. Basically looking to get our level here, um, so that I can exit my 0DT calls and work on the next position. So we should see our level hit basically any second here. And again, I have mine set to the 756 03 for the market conditional order. Do I still think there's a lot of room on the day? Absolutely. But at this point, I do want to see a little bit of a pullback to form a handle, since we are starting to basically close this cup. So I will be taking some short positions once we get to this upper Bollinger at the top of this cup. The upper Bollinger is currently at the 756.37, so we still have roughly a whole another 60 cents of upside to push here before we really take any short position. Are the 758 calls worth it? It will be once we have our handle downward. Okay, we want to make sure we get this cup filled first. From that cup being completed, we will then look for some bearish structure in here. From that bearish structure, short downward, very likely towards that 20 mile range. From that 20 mile range, that's when we can take some of those 758 calls to the upside, which the 756 strike will be fairly cheap at that point too, because we should pull back basically that 754. Currently the 20 miles at the 754.25. I'm expecting us to pull back probably closer at 754.40-ish range once we actually do get our move to the upside. So that's when I will be adding more calls, is wherever the bottom of this handle is. Okay. So I'm going to mark this with red. That can stay yellow. But that's kind of what I'm looking for out of the rest of the trades today. Form the top of this cup, find the bearish structure, short downward, buy the bottom of that handle, head upward towards that closing range on the day that we talked about. Now, not to shamelessly promote myself or anything, but I am wanting to start the afternoon classes, uh, probably starting this next week. And those afternoon classes will be on Tuesdays and Wednesdays, probably around, I wanted to start around 5 p.m. my time, so that'd be around 9 or around 8 p.m. Eastern Standard Time. Now, these classes I will have VODs on, but this is kind of the shameless promotion part. For those classes, this is going to be covered under the $29.99 a month subscription. So whether you take that through Discord or through Patreon, or whether you take that through um, YouTube, both of those will cover that. But we'll go over all sorts of different mechanics from the moving averages to the Bollingers, going over individual trades, all different types of stuff. Um, so if you are wanting to join those classes, again, I have those set for $29.99 a month. Super cheap if you really want to learn how to maneuver trades and everything like I do. Um, but other than that, shameless promotion over. You can always ask questions during the stream, and I'm willing to answer those questions. So, yes, I will still be doing live day tradings. Yeah. Thank you. I appreciate that. So what I bought on the watch list today, I added some of the open. I added those plug calls. Hold on, I'm just looking at something. And then I added some of the GDRX 2.5 calls, which are doing very well right now. I wish I added to some of those XLF calls because those are up already 100%. The Nova calls are up 70%. So most of the watch list is doing very, very nice today. So I'll have them through YouTube. Um, so if you are on the Patreon side, then without having that YouTube membership, um, I'll be able to link you the stream VOD, or not the stream VOD, but the stream live. But it'll be a private link, so it'll only be through basically my section on the Discord. But whether you're through YouTube or Patreon, you don't have to worry about connecting that too much. The YouTube automatically should connect to the Discord, but it will be streamed through the YouTube. So one way or another, you're going to be able to have access to it essentially. Would a 758 call for SPY be a good trade if I got in at 0.10? It would be a good trade, but again, I really, really, really want to wait for this handle, because you might be able to get those calls for maybe even half the price at that point. And the likelihood of them pulling to at the money is very, very, very large today. Can I share the watch list? Yes, I can. I have it typed out, so I'm just gonna copy and paste it into the chat. Give me 1 second. Hold on, I got a second paste to this part. So that's kind of the watch list that we're looking for. Um, has the option plus the date in it. You're very welcome. Yeah, so if you are just through the Discord, you don't have to connect it through like YouTube or anything. Again, with those private stream links, I can send that to you regardless. Um, but it'll automatically pop up for people through YouTube. That's the only difference is that you'll have to access it through the Discord link rather than um, it just naturally popping up through YouTube once we start the classes. I've made money on the 70 or 754 spy calls, very good. We are bullish today, even though our technicals did say that this was the short position. Um, I know some of you weren't in the stream earlier, but we did discuss do not short this. You know, we made that very clear that shorting this would be not the best idea, because we did identify this very large fair value gap, and you just can't fight the fair value gap. No point to fighting it. They're just trying to buy it up. But I will be shorting the top here, and we did have a very quality short at the very beginning of the day before we fully identified this gap. But we did identify this cup, and we did want to short the top of the cup, so that's where we got that short position. Now we were able to take the 756 calls around that 754, basically high or that high 753 range. So not the worst. It would have been great if we had a better call entry, but I'm still very happy with the calls that we got today. We're expecting a slight pull downward though. Um, once we do hit the top of this cup, which we have not hit the top yet. It might look like it, but there's still some more room in there before that cup top hits. So looking for that to complete. From the completion of that, we will try to target some bearish structure, have a very short position, um, basically to that 20 mile range, which is constantly pulling up by the minute. From the bottom of that range, we will then engage on more calls into the end of the day. Very structured day, very good day so far. So yeah, just waiting for more structure to form. Now on semis, plenty of upside still left to go. Um, we've not closed any of these gaps yet. We have a small cup right there that could be building a handle, but really looking for this larger breakout in the day, basically up to this 607 range. We should fill a lot of that selling from the overnight and the after hours. And let's check QQQ. Same thing here. QQQ has not closed the cup to the upside. So we do need to close that first before really expecting any major downside. That cup and handle broke out very well. Apologize, I can't talk very well today. I'm still dealing with my pneumonia. It's not as bad though, but Still dealing with it a little bit. But yeah, QQQ we should be seeing hit the top of that 742. From the top of that 742, we'll look for some form of bearish structure because again, this will be that very well-defined cup. From that cup top, look for a little bit of a handle, and then we can start trying to push some of these other gaps. Again, I really do think the market's trying to close off all of this selling that occurred in the after hours and the overnight. So basically, this entire level should be bought up today. So that's why I'm very bullish on the market right now. If we can get calls that are well timed, I think they're going to pay out absolutely immensely. Oh, I do believe in trading. It's just with the fair value gap, um, I'm not going to short against that. And I really do want this level to hit first before I target some short position, excuse me, some short positions. Even though we did have a little bit of an entry here, we see that within semis and within QQQ, hold on. See how semis did not push that upper Bollinger yet? So that technically has not opened that short position yet. QQQ pushed that upper Bollinger a little bit, but still trying to look for this upside gap. So that's why I'm not taking these short positions just yet. I want to wait for both QQQ semiconductors to align with what we're seeing on the SPY here. I don't think there's anything wrong with that short position, you know, because again, even if we are expecting upside, we still do expect a little bit of downside here. You know, we still are expecting some of these cups to form handles, from those handles to then head to the upside. So it's not like there's not room to short within these structures. Definitely is. You know, potentially this short position on SPY here, if you took that, could very well go to the 20 mile. And I think that's a very fair expectation. That's the expectation I'd have too if I took that short position. I'm just kind of biased in terms of the day. I want to see this cup closed. From the top of that cup, then I will try to engage on some shorts. I want to try to get a little more runway between these short positions because you see how small these movements are? Very, very small. Very, very small so far. Still room to take them, just not a whole lot of room on the downside just yet. If we can get this pushed to the upside, if we can get the upper Bollinger, which again the upper Bollinger is at the 756.47, basically a whole dollar above us, that would push us probably to almost that 757 range. Then that would give us, you know, $2, $3, $4 on that downside to create that handle. Which then those short positions are going to do super, super, super well. At least that's the thesis anyway. So it's not like I'm not trading anymore. It's just with us identifying this fair value gap very early on, I did not want to short against that because that would have just spelled disaster. But I do want to short the top of this cup once we get there. That's something I 100% want to do. What strike on the Broadcom calls did you take? Let's take a look at Broadcom here. Doesn't look like a whole lot of movement in here yet, but there is. Starting to form this cup here. Not there just yet, but starting to get close. Did have that head and shoulders play out in the after hours and the overnight. So while I'm not expecting Broadcom to fully fill this gap to the upside, because, I mean, that's very absurd. I don't think that it's unreasonable to try to target that on some of the larger time frames. Um, it's like on the daily time frame, you have this cup formed here. With that cup, you do have a handle formed. A little bit of a breakout in that handle. Bit of a pull down from that handle, which that's kind of a good thing for this cup on the daily time frame, because this gives you a lot more downside to create that handle to the upside, which potentially this could be the liquidity to do that. So could be a very good option to try to take towards basically the all-time highs again. Especially on the weekly time frame here too. With the weekly upper Bollinger push, usually week 1, you'd expect that level to be secured. Week 2, we usually anticipate a higher high. Now, this all depends on if we continue seeing the buying throughout, the rest of the session moving into tomorrow. And if we start reclaiming some of this major downside that we've been seeing, but the upside in Broadcom can be pretty extreme. QQQ, potentially giving you that exit on those puts, and potentially entry into calls. SPY, very close to the same. Yeah, I'd be rolling those drip calls out to September or December, but I still like the level. It's just, June 18th is right around the corner at this point. Um, unless we start getting some very, very good news with the conflict, then I'm not so sure about those hitting come June. But I still like the position overall. So if you can get those rolled out, absolutely, I would definitely suggest doing so. And I want to look at a couple different things. So Starbucks is breaking down again, which is very, very annoying. And potentially today's breakdown could really take us down quite a bit if we don't find some support. So I will be looking for that. If these positions aren't starting to do better by tomorrow, then we will reevaluate them. Okay, and we're getting ready to hit the 20 mile on the 5-minute time frame, which this will be a call entry for me. Again, I'm going to take a very light call entry here, and these will be the 756 calls. Once we actually hit the 20 mile, 20 miles at the 754.71. So once we hit that level, I'll take a light position into the 756, just because we have not completely closed this cup to the upside just yet. And I do want to, see that closed. So looking for this small push down, and from that small push down, I will be taking additional calls to the upside. So looking for our level to hit here. Excuse me. This will also be a good entry on those 758 calls. Now again, we can pull down all the way from the upper Bollinger towards the lower Bollinger. That's kind of, worst case situation. But I would expect that more so once we actually fully fill this cup to the upside. So if that happens, I will be adding calls into the lower Bollinger as well. But I do think that the upside today is just very, very large. And targeting that's going to be worth, quite a bit. So once we get this call entry, um, I'll be ending the stream fairly soon after just because I still am dealing with this pneumonia. Even though it's a lot better, it's taking a lot out of me to continue to talk throughout the entire trading session. Not that I don't want to, you know, I really do enjoy talking while I trade. It's a lot better than just looking at a screen. Um, but I do need to rest my voice a little bit because I'm noticing that it's starting to hurt quite a bit. So once we find our entry, um, I'll be happy to go over any final questions. But then after that, I'll be very likely ending the stream very soon. And after ending the stream, we'll be streaming tomorrow morning. So GDRX is already up. Is it still a good idea to buy the 2.5 calls? I still like those calls. Yes, I do. You're very welcome. You're very welcome, the algorithm. I try to stream even if I feel bad. If I could even stream only for, 30, 40 minutes, then I'm gonna find a time to do that, so. Now the 20 mods at the 754.81, so we need literally just about 30 cents more before I take these calls, and again, I am taking the 0DTE 756 calls once we get that level. But I do think that the calls all the way to the 758 are extremely viable. So let's get our push down. Let's get this call entry. I want to look at the 1 minute time frame here just for a moment. And I'm not deleting this blue block yet, even though I know it's kind of annoying to look at. I want that liquidity really being shown there. On the 1 minute time frame, we do have this smaller cup and handle. So looking for a small pull down. Ideally, it would be better if we get this inverse cup so that we can get a really ideal call entry. But potentially this smaller cup can form this handle to break us out, which I hope doesn't happen yet, because I want to enter these calls cheap. Now, if this breakout does occur, then we'll simply just be waiting for the top of this cup. Look for bearish structure at the top of the cup, short downward. From that downward short, then we would try to find an additional call entry. But with this range, I think I want to very lightly add to my calls here. Just extremely, extremely lightly. Just in case we do get this upside breakout. But if we do pull downward, I will tack on a couple more of those calls. But I do think that the overall upside today is still quite large. We still have a lot of buying to be had. Semi is seeing a little bit of a bounce too here. QQQ bouncing off that 20 MOS. So yeah, I do think that this upside is really starting to get primed to at least close that cup top that we've been talking about. Very welcome, everybody. I'm glad everybody was able to do well on those calls. Yes, I'm entering just a very small position into some of these calls to the upside. We can still pull down a little bit, so just be cautious of that. But if we pull down to the 5-minute lower Bollinger or anything like that, then I'm still going to be adding calls to the upside today because the upside looks very, very, very good. So you really struggle with patience while trading. That's a big thing a lot of people struggle with, and unfortunately, one of the big ways to get around that is just to trade very often. And to understand that within the time frame that you trade, this is kind of the type of positions you should be looking for, whether they're dated, whether you only have 1 or 2 hours to trade during the session, I don't know. Some people only have a few hours, some people can trade the entire day. Position based around that. So if you're able to trade for the entire day, um, you don't need to be trying to force positions. You can really wait for very, very, very prime positions to the upside or the downside, um, and simply just wait for that singular, very strong trade for the day to open up and take that and make a lot of money. Um, if you don't have that time, for example, me, I can't trade the entire session. Usually I get the first few hours and then I need to take care of my daughter after. Um, that means that I only get 0 DTs within the first few little bit of the day. Um, Basically these calls that I have going for this cup top right here. That's pretty much going to be my 0 DTs for today unless we get lucky, get a real pull down on this cup, and then I'll be looking for, some 0 DTs to set a limit order basically on, or the market conditional order on. Um, but patience just takes a lot of, time within the field. So the more you trade, the more you're gonna learn when these entries and exits really are. And another big thing about patience is that patience is formed from understanding where the outcome is going to end. So for example, and I always use roads for some reason. It's like when we're children, we go on car trips, right? And, the town might be 2 hours away, might be 4 hours away, whatever it is. But those 2 hours can feel like a huge drag where it's like, oh my gosh, how long is this gonna take? How long is it before we're there? Um, Whereas when you become an adult, you learn that with driving, that 2 hour route is going to take 2 hours. You know the route of it, you know how to navigate to get there, so your expectations are set. Um, so you don't really have that nagging feeling in your head where it's like, oh gosh, how long until I get there? Well, you kind of already know how long until you're going to get there. You know that from just actual experience, and you know that from all the instruments and everything telling you that, oh yeah, your trip's going to only take you from 10 a.m. to 12 p.m., right? Um, Same thing with trading. The more you navigate these trades, the more you learn how to enter, how to exit, things like that. That really sets up that navigation, where it's like, okay, my trip's only going to be 30 minutes long. I could deal with that. I understand what that's going to feel like. I understand, the steps to get there and everything else. So that's a big part of trading that I hear very often is kind of the impatience, but it's more so just the lack of understanding of where the destination is going to end. Okay. Um, and that's something, we're going to continue to work on each and every session. So definitely the right place to learn those skills. And we can always just discuss our trades and kind of the expectation of what you should be looking for and things like that. And that'll help balance that patience out. If I have one contract, should I close at the top Bollinger? Absolutely. That's the perfect mindset to have is basically you exit or you took that entry very close to the 20 mile range, push up to the upper Bollinger, take profit. That's a perfect, contract to take. Um, I'm looking for a little higher today, just purely out of, structural reasons. But if you're only trading that single contract, don't do that. Um, just take the safe trade. Take it from the 20 mile to the upper Bollinger. Claim that level, take profit, wait for the next position to open up. If we get our close that I'm expecting today, which should be basically above that 757 range, then I would say absolutely. Um, we should be having the expectation to kind of push up from here tomorrow. But that's only if we close above that 757 range. Okay, we have to close above the 5 mile today for today to be, quote unquote bullish. Okay. If we do not secure that daily 5 mile level, which again, that's currently at the 756.90, will be basically at that 757 range. So we have to close above that for today to be bullish. Which is another reason why I am so bullish on the day. Um, if the market's trying to claim that 5 mile level, then we have a lot of room to go. We took a little call entry here. It wasn't the perfect, we did not get all the way down to the 20 mile, but we did take a little bit of a call entry. Now, for these calls, I'm simply just cutting them out at the top of this cup. Okay, top of this cup, and I'll mark this with a horizontal ray because that makes it easy. It's basically at that 756.05. Now, that coincides very, very greatly with where the upper Bollinger is. The upper Bollinger is currently at the 756.56. So with the top of a cup, again, we do expect bear structure to build at the top of that cup. So that's telling us, multiple different signals that we should very likely be seeing these calls push well into that upper Bollinger. But from that upper Bollinger, um, we will be working to identify bearish structure. And from that bearish structure, I will be personally taking some puts to the downside just because I short the top of every cup. That's just what I do. Um, and from that position, I'll be looking for calls, uh, into the end of the day and moving into kind of next week. So we did take some of the SOXS 5 puts for next week. Looking for those to do really well. And again, that's SOXS. That's a bear ETF. So taking puts on SOXS is basically taking semiconductor calls to the upside. So some of my calls here have been closed out. So we got our move to the upside. Very good. Now we just need to see this upper Bollinger push for everybody to really fully exit those calls and wait for that bearish downside. So I'm glad that worked out. I don't really worry about theta too much. Um, it's something that I know many do, but if we time our entries very well, then the exit's going to present itself regardless. If our entries were not good, then that contract's going to have issues regardless. Whether it's theta, whether it's IV, whether it's the delta getting destroyed, doesn't really matter. Good entries bring about, very potential good exits. Okay, so that's kind of the thesis that I have, is that focus on those really, really good entries. Try to get some of these very quality exits. Like for example, if we can get lower Bollinger calls into the 20 MA, then that's very good. This trade is being a very, very solid example of from the 20 MA to the upper Bollinger. So just go level by level. Sometimes calls or sometimes our contracts will get chopped up, but that's just kind of the part of trading each and every session. Not every single trade's going to go in your favor. And you just have to really have that understanding that not every trade's going to go in your favor. Sometimes you're going to find those really good entries and your contract's still going to get chopped apart. We as traders, we just have to learn the skills to understand that if our calls are getting, or if our positions are getting chopped up, maybe it's time to exit. Maybe it's time to reconsider that trade. Things like that. So the target for the additional calls, once we do get the pull down to the upside, I'm basically targeting, right above the 5 MA on the daily time frame. So that's going to be around that like 757, 17-ish range on the day. Okay. Can we absolutely push above that? Absolutely. Just watch what's going on with the structure. So at the top of this cup, we are expecting a pull downward. Okay. What that's going to do is that's going to open this upper Bollinger to the upside more, and that'll be pulling up our 20 MA. So the exit will present itself if there's going to be an additional room for those calls to the upside today, because the upper Bollinger will be expanding. Just a lot of this will be pulling upward to give you that room, saying, okay, there's that exit at that whatever range that upper Bollinger is at that point. So use your upper Bollinger to your advantage. Yeah, just if you had none of the structure here and you didn't know what was going on, you'd have to follow your technicals. Okay? Your technicals tell you that once you get to the upper Bollinger, that's kind of getting ready to go off the side of the road. The market does not like to go off the road very often. If it does, it usually tries to pull back on the road. So with that, thesis in your head, you have to think that, okay, once I get to that upper Bollinger, that's my exit. All right, everybody, if there's no final questions for today, then I'm going to go ahead and end the stream. Going to give everybody just a couple minutes to type a question out if you do have any final questions. But if you don't, thank you all so much for watching. Thank you all for, supporting what I do. Um, and again, not to shamelessly promote, but I'm going to shamelessly promote it. I am starting the classes very likely this next week. Again, they're going to be on Tuesday and Wednesday evenings slash afternoons. I will post about that in the Discord and everything else, but that will be covered under the $29.99 a month membership. Whether you get that on YouTube, whether you get that through Patreon, it doesn't matter. They're all going to connect regardless. So with you being connected to YouTube, you can connect that to the Discord. Um, and that Discord connection will give you the proper rank and everything automatically in the server to be able to access those channels and whatnot. Now with this $29.99 a month membership, um, I am writing a ton of learning material. I do have a ton of material already written, but it's just not very formatted and everything. Um, I'm going to be posting a whole bunch of learning material, learning modules. They'll come with tests, all different types of stuff. So I'm looking to start getting those up this next month. Okay. Um, so yeah, that's my shameless promotion. Um, if you're wanting to learn more and go over some of these mechanics and everything, then those afternoon classes are going to be very good. Whether you watch them live or you watch a VOD, um, they will be teaching a lot. But other than that, thank you all so much. Thank you all for the support. Thank you all for watching. And I hope all of you were able to have some very, very killer trades today and get positioned into some of these other longer term contracts that I think have a absolute massive runway on them. So with that said, I look forward to seeing you all tomorrow and thank you so much. I'm gonna spend the rest of the day kind of resting and then trying to get my lungs and everything to feel better. So I do appreciate that a lot. Um, but with that said, have a great day, everybody, and I will talk to you tomorrow morning at 9:15. Yeah, have a great day, everybody. Take care.